Good morning, Dr. Hazianti. We are from Group 3 from Group B. Today we will be presenting for PAT3053, which is Zakat and Tax Planning. And our title is Implications of Withholding Tax on Payments to Non-Residents. And I also will be introducing my group members, Sarli Ganesan, Hanisha Mohan, Vanessa Parmeswaran, Tirusha Thamudaran, and myself, Kartika Ravindran. Now I will present the introduction. Withholding tax (WHT) applies to payment made by Malaysians resident to non-resident for things like services, royalties, interest, and contract works. It enforced under Section 109 to 109F of the Income Tax Act 1967 to ensure income sourced from Malaysia is properly taxed. Non-compliance can lead to penalties and disallowed deduction. Malaysia Double Taxation Agreements (DTAs) help reduce or extend WHT provided a valid certificate of residence (COR) is given. Overall, businesses must manage WHT responsibly and ethically, especially in today's digital and global economy.
In this part, I'll be explaining regarding the concepts, which is withholding tax, non-residents, and the purpose of withholding tax. First of all, what is withholding tax? Withholding tax means a portion of payment which is held back by the person making the payment. They are called as the payer and sent directly to HLHDN, Inland Revenue Board of Malaysia. This happens when money is paid to someone. The someone is called payee for certain services or transaction. For example, I pay you the money and I'm called the payer, and you are the payee, and I withhold a certain amount of your salary. This helps to make sure that the tax is collected properly, especially when the payee is not in Malaysia or not from Malaysia. Now, let's talk about non residents. Non residents refers to someone who stays in Malaysia for less than 182 days in a year. It doesn't matter what their nationality is, if they don't meet the 182-day rule, they are taxed as non residents, usually at different or higher tax rates. Now, what is the purpose of withholding tax? It is to make sure that Malaysia, our government, collects tax from foreign individuals or companies who can earn or who earn income from Malaysia but don't live in Malaysia. Instead of waiting for those companies or foreign individuals to file taxes, the local payer, our government, automatically deducts and sends the tax to LHDN. This prevents tax evasion and ensures our country gets its fair share of tax revenue.
Okay, now is current rules and practice. In Malaysia, withholding tax is applied to payments made to non-residents for service like royalties, interest, contract fees, and rental of movable assets. It ensures the government collects tax from foreign individual or companies without a local presence. Government by the Income Tax Act 1967 and enforced by LHD, withholding tax must be deducted and paid when the payment is made. So, the first one is a withholding tax deduction. There is a nine main important point, which is a contract payment to non-resident under Section 107A, interest payment to non-resident, royalty payment to non-residents, payments to non-resident public entertainers, weight or property trust fund distribution, retail money market fund distribution, family money or takaful or general fund distribution, income tax under paragraph 4F of income tax, early withdrawal from retirement scheme. The second one is enforcement. If withholding tax isn't paid on time, a 10% penalty will apply and the amount becomes a debt to the government. The expense may also be not deductible. DGIR can take legal action, but if withholding tax is later paid, the deduction is allowed. Wrong tax filing may lead to extra penalties. The third one is a contract payment to non-resident. Contract payment to non-resident contractors for service in Malaysia are subject to 13% withholding tax, which is 10% for the contractor and 3% for their employees. If the contractor has a business present in Malaysia, they must also file a tax return for the work done locally. The fourth one is a interest exempted from withholding tax. There's a main five things, which is a approved loan, licensed bank, government security and suku originating from Malaysia, and unit trust. The fifth one is a royalty payments for non-resident. Royalty payment to non-resident are taxed at 10% unless reduced by a DTA. This cover payment for IP like software, patents or know-how. Business must deduct and remit the tax to IRBM. Failure to do so leads to penalty and the expenses may be disallowed. The sixth one is a payment to non-resident public entertainers. Non-resident public entertainers are taxed at 15% on all income earned in Malaysia. Cash and benefit like travel or lodging, the payer or sponsor must deduct and remit this within 1 month or face penalty. Withholding tax must be paid before the entertainers can get an entry permit. The last but not least, payment of special classes of income paid non-resident. Payment for service, installation, or use of movable property by non-resident are taxed at 10% unless reduced by a DTA. The tax apply only to service performed in Malaysia and payers must remit it to IRBM or face penalties. That's all for me. Thank you, Doctor.
First, let's look at the issue in withholding tax. The major issue in withholding tax is the classification of payment. Dispute arise whether payment are royalties, business income, or technical fees. This affect the withholding tax rate and can lead to legal dispute. Another concern is trade override. Some countries impose withholding tax and override double tax agreement (DTA), causing legal uncertainty for business that rely on tax treaties. Tax refund delay also pose a challenge. Refund claims under DTA double tax agreement are often delayed, hence this can discourage many business from claiming their rightfully claims. We moving on to challenges. One of the major challenges is uncertainty in applying tax treaties. Non-residents often face confusion and delays when claiming tax benefit. This can lead to additionally compliant costs. Another challenge is the discrepancy between treaties rate and local enforcement rate, which can cause confusion and dispute, making international transactions unpredictable. Last but not least, withholding tax also increase transaction costs, affecting cash flow and reducing cost effectiveness for business involved cross-border trade. Now let's be discuss about the controversy. One of the key controversies is double taxation. Non-resident may pay tax in both their own country and also the country from their earned income. This can create fairness concern. There's also disagreement over tax jurisdiction. Countries, however, often tax over which jurisdiction has the right to tax income, especially when there are unclear tax rates in place. This can cause international tax tension where the government may feel like their tax rights are being undermined. Finally, the perception of excessive withholding tax sparked controversy. High withholding tax rate, especially when they compete with treaties rate, raise questions about their fairness and also justification. Non-residents often feel like these rates are too high and the compliance burden is too heavy, intensifying the debate over fairness in tax system.
Let's see about the recommendation and best practices. First, clarify payments categories. The IRBM should provide clear guidelines on type of payments. Taxpayers often struggle to determine whether a payment is a royalty, service fee, or business income. Clear rules will help avoid confusion and disputes, especially for digital service. Second, simplify DTA claims and refunds. Make the process of claiming DTA benefits and tax refunds faster and easier. Non residents face delays and complicated steps. Moving the process online and automating parts of it will be improve efficiency and reduce waiting time. Third, provide training and awareness. Train tax officers and company staff on withholding tax matters. Proper training ensures tax officers apply rules correctly and helps companies avoid errors and penalties when handling international payments. Fourth, improve communication and support. Strengthen support between IRBM and taxpayers. A special team or consultation service can guide taxpayers on withholding tax matters, especially for non residents or digital services, reducing future problems. Fifth, update rules for digital services. Modernize withholding tax rules to suit digital business models. As a digital service grow, specific rules for things like cloud computing and streaming are needed to avoid misclassifications and overtaxation. Sixth, enhance international cooperation. Work closely with DTA partner countries and global tax groups. This helps solve treaty mismatches, prevent abuse, and align Malaysia's system with global standard, improving trust and investment. Lastly, focus on system improvements, not just laws. Improving withholding tax involve better process and support not only legal changes. Clear rules, better communication, and international cooperation together make the system easier to follow and more attractive to global investors.
In summary, withholding tax WHT is essential to ensure that income earned by non-residents in Malaysia is properly taxed. However, issues like payment classification disputes, delays, and digital services uncertainties create challenges for both taxpayers and authorities. These challenges can affect foreign investors' confidence, but they are manageable. By improving regulations, digital systems, and international cooperation, Malaysia can create a more efficient and fair WHT system. A transparent WHT framework supports both tax integrity and global trade competitiveness. Thank you.
Now, let's see the role of characteristic. Sally as a moderator, Tirisha as a tax advisor, Vanessa as a tax authority representative. Kartika as a non-resident representative and Hanisha as a photography and editing. Next, we will display role-play video as non-resident tax.
This is a role play about the withholding tax on payments made to non-resident business in Malaysia. We will explore its frustration of the business owner who has been hit with the 10% withholding tax and how do a tax advisor and tax authority representative handle these situations.
I can't believe this. I'm trying to grow my business and the payment I just received from Malaysia had 10% withheld. I'm already paying taxes back home. This is ridiculous. What's going on?
Okay, calm down. Someone please take the share. You may sit down first. Have a seat, madam. Okay, I see your problem. Withholding tax is something many businesses face internationally. It's a tax deducted by the source's country payment made to foreign entities. But it's not as straightforward as you think. But you might have more options than you think.
But why am I being taxed like this? The payment was for services, not royalties. Why am I being treated like this? I need answers now.
Actually, this can get tricky. The payment you receive could be classified differently under Malaysian law, like royalty or technical service fees. And depending on that classification, the withholding tax rate could be changed. It's not just a simple fee. It's a complex system designed to capture foreign income.
I'm sorry, but the tax code is clear. Service rendered in Malaysia are taxable here. If you're going to do business in Malaysia, then you need to compensate the Malaysian government. You were informed about all this before you were doing business here, right?
Taking away money I need. I'm already dealing with taxes back home. Why do I need to pay twice? This is a burden and it's going to destroy us.
Okay, I heard you. Double taxation is a concept, and you are right. It can be financial draining, but don't panic. Malaysia has double taxation agreement with several countries. If you tax in Malaysia, you can claim tax back or reduce it, depending on your country's agreement with Malaysia.
The law is law. You need to comply. It's a slow progress, but the more sooner you begin it, the sooner you'll feel relief.
So you're saying I need to apply for a refund? But the process is slow, complicated, and full of red tape. How do I even make this work?
Okay, the process is not perfect, but you can navigate it. You will need to submit the right form and documentation, and it will take time. But don't worry, face off. You might get the tax back through the DTA, but you need to stay persistent.
Alright, I'll follow your advice, but honestly, this system needs to change. This is making it so hard to run a business internationally.
You will get through it. So stay on top, and next time we will make sure you are prepared to prepare. It's all part of doing business across borders.
We enforced the law for a reason. It helps the country and the government to thrive. You just need to follow the rules.
And so, the non-resident respective has learned about the importance of withholding tax and now navigating the DTA systems may be help reduce the tax burden. While the system may be frustrating, the only way forward is through patience and understandings. Thank you.
Thank you, Doctor, for paying attention for our video presentation.